people are investing in one or two or three houses depending on their borrowing capacity, not the whole market, and not all properties are created equal. Where are the opportunities? Where would you be investing in late 2022, early 2023?
Yeah.
Where do you see those opportunities?
It's dynamic property, which is one of the things I love about it, and that you need to look, as we said before, a little bit into the future, not a long way into the future. You don't want to get too far ahead of it. But what we've been seeing in a trend has been a really steady reduction in vacancy rates. In Victoria is an interesting place.
Yeah.
They're forecast to have 6.9% growth of population in the next 3 years. That's by far the highest rate of population growth. Now, a year ago, they had the highest vacancy rate. Now they're pretty much caught up with the rest of the country in the low 1%, and they're very shortly going to crack under that 1%. So while Melbourne's had been a bit stagnant, we see that starting to come out over the next 12 months. That population growth, to put it in perspective, the next highest is Brisbane, or is Queensland, at 5.5%. So 6.9 compared to 5.5%. That's at least a 20% extra kind of pace on the population growth coming into Victoria. So Queensland, high population growth, WA, high population growth at 5.3, and then you step down to New South Wales at about 4.6. So those three states, Victoria, Queensland, WA, really solid with population growth. Affordability in WA is still I'd say, optimum across Australia right now in terms of their affordability. They've got good rental yields, low vacancy rates, and a lower entry point. So for those looking to get into the market, and might be, if you're constrained on borrowing capacity, you're looking sub 700,000, WA, great place to be going. Mm-hmm. Where we can get into Brisbane sub 750, we think that's a good market to be in as well, in that sub $750,000 market. Now, there's a lot less opportunities there now than there were 12 months ago and 24 months ago, because the base price has been rising really hard, particularly even in the last 12 months, while the middle and the upper end has been coming off a little bit after their really solid price growth. The bottom's rising and there's fewer properties and opportunities to get in that sub 750. So if you can get in there, that's great. And pretty much sub 800 in Victoria as well. Now, again, it's probably no surprise that these price points also match in with where the government support stops. So once you cross over 800,000 in Victoria, you're not getting first home buyer support.
Yep.
And as an investor, we're not going to get that either, but we want to invest where the first home buyers have got that extra support, because that's adding extra demand into that market. And that's obviously why those opportunities are diminishing really quickly. So again, driven by your price point is going to make a lot of your decision, where your existing portfolio is or where you might already live. We're big proponents for diversification. So if you've got a principal place of residence in Victoria, you actually might be better off to invest in another state. So you're catching the wave and you're kind of getting more stability to your growth. So they're really the three markets. Now, it's not to say that there's an abundance of opportunities out there.
Yeah.
They're a lot harder to find today, but when you can get them, then there's going to be continued solid growth through 2023. And I think it's, as I said, an exciting time to be investing, because we know as soon as you get in, your rents are going up. You're going to be making more money next year than you made today. So, and probably just coming back to one other thing, we know that with the diminishing housing starts and the government's focus on trying to stimulate more houses, there's probably going to be something else that we see coming out through next year's budget. I wouldn't be surprised whether it's state, federal. There's going to be more intervention. They're going to try and promote and stoke activity. Now, the last time this happened was 2020, when the home builder came in. And I tell you what, I'd much rather have bought a month before home builder started, or 3 months before home builder started, than 3 months after it started, because the price of land, the price of building just went up instantly as soon as the government announced that. So ultimately, all of the incentive they gave went into the pockets of developers and builders because their prices just went up. But it created that momentum in the market, which did result in prices continuing to go up. So we want to get in ahead of these things. You don't want to wait and be a follower, because you're going to miss that opportunity. You're going to miss that 5-10% spurt that you'll get when these activities and these incentives and interventions happen.
That's so true. You know, we talk to a lot of people with our team here at OpenCorp, and often people say to us, oh, you know, we'll wait 6 months until things have come back. The reality is that by the time you hear about things coming back, there's already opportunity that you've missed out on. That's why at OpenCorp we take the education side of things so seriously. Finding these opportunities is really tough. You know, we've got a research and analytics team of 6 people. So if you're trying to do it after hours or on the weekend and you find that you're not getting very far and you think that you could use some professional help to do that, please reach out. You know, we saw the market 2.5 years ago. We were talking to our clients about the opportunity despite the doom and gloom, and everyone that held a property through the last 2 to 2.5 years has made upwards of 200 grand. So if that sounds appealing and you'd love that in your portfolio, please reach out, get in touch. Matt, thanks again for joining us. We'll see you next time on Conversations with Matt.